Hi guys, welcome back to another video. My name is Josh, and in this video I'll be providing you with a portfolio update of my public Sharesies portfolio. So this month of March has been a really interesting month, and essentially this whole month has really reflected the economic damage that the current situation had on global markets. So if you've been invested in the stock market, then this month might not have been such a good month for you. You would have seen your portfolio value decline quite severely if you have invested into equities. So I'll be showing you what has happened to my public portfolio. So this month I've actually made a few more moves than I usually do to this portfolio. So during this month I've bought a stock and I've also sold a stock. So hopefully you guys will be interested in seeing that. I'll be talking about that later. And as well as that, this channel has grown quite quickly as well. So thank you all for joining in. If you haven't already, be sure to subscribe. I know about 60% of you guys watching aren't subscribed. So subscribe if you haven't already. Follow me on Instagram as well, where I post updates on my public portfolio and other stock market news as well. Just a disclaimer that I'm not an authorized financial advisor. The stocks that I mention, the stocks that I have in this portfolio are not recommendations for you to buy these stocks or sell these stocks. This video is purely for entertainment purposes only. Because of the quarantine situation out there, hopefully this does provide you some entertainment value and help you pass some time. So without further ado, let's go right into the video. Okay, so this is the portfolio. So current portfolio value is $3,499.04, and that represents a return of 17.27%, a $746.75 loss. And you can see this chart here. So we started off the portfolio pretty well. We were in the green most of the time, and then at the end of February, I believe, it was a negative number. In March, it really just cratered. So you can see the gap between the dotted lines and the pink lines. And that is to show that the value that I've put in, which is the dotted line, and the current market value, which is the pink line, the gap is pretty huge, and that was a loss. So at one point I've lost about $1,000. So the portfolio has recovered quite a bit. So at the moment, sitting on a loss of about $746, and that is a loss of 17.27%. And to show you guys what I have in the fund, so there's Australian Mid-Cap Fund, which is the biggest loss maker in the fund section. Emerging Markets Fund, NZ Top 50, and the US 500. And in terms of individual companies, I have Agosi Property, and this is the new addition to the portfolio, Auckland International Airport. Heartland Group Holdings, Main Freight, NZX, Somerset Group Holdings, and Z Energy. Okay, so as you can see, quite evenly spread between ETFs and individual companies. And that's just the way that I've set up this portfolio to begin with. If you haven't checked out already my first episode, I go through the rationale of how I allocated this portfolio. So be sure to check that out. Now going into the spreadsheet. So this spreadsheet basically is a snapshot of my portfolio from Sharesies as at the 3rd of April 2020. So I haven't done it right on month end because I was busy at the time, so I've just used Friday's values. And in this column F here, we have percentage change, which is basically showing how my allocation has shifted compared to the prior month. So as you can see, the ETFs haven't really changed dramatically. They're all around the 1% mark. Somerset has declined by 2%. So if you look at last month, Somerset made up 14% of my portfolio, and currently it's only 12%. So that's a negative 2% change. And that's mainly because Somerset has taken quite a big hit from the current situation. I've actually made a video specifically for Somerset. If you'd like to check that out, link will be in the description. The new addition, Auckland Airport as well. Currently it's at 8%, 8.5% of my portfolio. Heartland Bank hasn't really moved much. In terms of its share price though, Heartland actually did move quite significantly. So it was 93 cents on Friday, whereas last month it was $1.69. So Heartland Bank has dropped quite dramatically, and that was because the RBNZ did announce that banks can't pay any dividends for the time being because of the current situation. Heartland Bank is forbidden from paying any dividends, but Heartland Group, which owns the bank, isn't forbidden. So we'll just have to see what happens there. They might not pay the dividend because it's the industry norm, but we'll see whether they do end up paying that. Management did say they weren't included in the RBNZ sort of restrictions, but chances are I feel like they won't pay it out. Okay, so in this column cut, I've put a question mark here to reflect that. So that's why it's tanked quite a bit, and you can see the loss is quite dramatic, 32% loss. Okay, so not so good here. Argosy, that has actually gone up, and that's because I've actually sold out of precinct properties. So current allocation for precinct is 0%. Now it's I've sold that and I've bought Argosy, and I'll talk a little bit about my rationale for that as well. NZX not really changed. Z Energy not really changed as well. Main Freight and Top 50 Fund. Okay, so the big changes really are the addition to Auckland International Airport and the movement between precinct to Argosy. Currently, the portfolio is sitting at a 17.27% loss, and adjusted returns wise, we're sitting at negative 28%. And that has been quite a big drop from last month. Last month we were just at negative 2%, but I'm not too worried because the opportunity of buying in cheaper has really increased from last month. If you think about this as a discount to your portfolio, you can essentially buy the same shares for 17% cheaper. Why wouldn't you, right? So that's the mindset that I'm having. I'm actually quite happy that there has been a drop in the markets because for so long the stock market has been quite overvalued, and surprisingly I did make a video on how overvalued the NZ markets were. You can check out that video in the link below as well. And not long after that, this happened. That's why I use this dollar cost averaging strategy where I pace myself in terms of stocks that I want to buy. Every week I deposit in $70, and for every 100 subs I get on the channel as well, I'll contribute $100. And what this does is it lets me invest on a weekly basis. So if stock prices continue to drop, I'll be able to take advantage of lower stock prices. So if you think about it, Heartland Bank, last month I was buying it at $1.69. This month I'm buying it at 93 cents. That is a huge discount. The benefits of dollar cost averaging only really comes when stock prices drop. Okay, if stock prices keep going up in a straight line, then you should do lump sum. You should put everything at the start, and then it only goes up from there, and then you'll make the most gain from there. But if you did lump sum investing at the start, then if the markets go down, you lose a lot of money. Whereas if you spread your purchase out over a few weeks, months, years, then you're able to benefit from lower prices. So enough about dollar cost averaging, because I've talked too much about that on this channel. In terms of dividend cuts, so this column here is, I added a cut column. So Auckland International Airport has cut their dividend. Heartland Bank, as I've mentioned before, questionable. Maybe they'll cut their dividends. Argosy actually has announced that they wouldn't be cutting their dividend, they'll be maintaining their dividend. So that was really positive news. And that was also why I've been focusing more on Argosy. Precinct as well said that they're likely to be maintaining their dividend, but Argosy has confirmed that they will be maintaining their dividend. And Z Energy as well this week did mention that they'll be cutting their dividend. Okay, what to do when dividends are cut? So when dividends are cut, you'd have to assess whether it's based on a deteriorating sort of business performance. And because of the current situation, yes, that will be very likely. So this is more of systematic risk rather than idiosyncratic risk. And then you have to consider as well whether individual stocks, whether they'll recover after the whole situation dies down. So in terms of the businesses that I have here, I feel like, it will continue to operate once business comes back to usual. How long it will take to recover, I don't know. Management doesn't know either. Dollar cost averaging over time to reduce your risk is a very sound strategy. In terms of dividend cuts, I'm not too worried in the short term. Remember, I'm buying these stocks here for a long-term investment, 5-10 years horizon. So I'm not too worried in terms of the short-term decisions of cutting dividends or maintaining dividends. Okay, but if they maintain it, then so be it. That's even better, because then you'll get income. If not, then the share prices will usually drop, and that allows for better opportunities to buy at a lower cost basis. So it's a win-win. Now to talk about why I've switched between Argosy and Precinct. Argosy property is trading at 89.5 cents. This number here, NTA, which is net tangible assets, sitting at $1.28. So what this number means is that if you sell everything, all your assets, and you pay off all your debt, shareholders should theoretically recover $1.28, and obviously you have to deduct the transaction fees and all that. So that is trading at a discount to NTA, because NTA is $1.28, you're only paying 89.5 cents. Now, if we look at Precinct is trading at an NTA of $1.48. The current share price is $1.68. So you are paying a premium on NTA, because if we liquidate all the assets, then we wouldn't be able to recover as much as what you've paid. And as well as that, they have a lower gross dividend yield of 3.8%. So, and when I was thinking about it, it made sense for me to sell out of Precinct, which was trading at a premium to NTA, and buy Argosy, which was trading at a discount to NTA, and they also pay a higher dividend yield. Now, you might ask me what the reason for the discrepancies between the two, why one is trading at a discount to NTA, one is trading at a premium. Well, for Precinct, they do generally tend to have quite premium properties in the central CBD areas. And so what these properties are, offices that have, very good tenants, a very long sort of tenant lease period. So they have usually, 9 years of rental income all already signed and secured. And so the market might perceive Precinct to have a better property portfolio than Argosy. Argosy is trading at a significant enough discount for me to sell out of my Precinct shares to buy Argosy shares, and it provides a better dividend yield, which has been already confirmed by management. So to me, it made sense to switch between Precinct to Argosy. So now let's just touch briefly on Auckland International Airport. So this is a stock that has been heavily beaten down by the entire situation. Traditionally, it has been quite expensive, so now allows an opportunity if you want to get in to buy this stock. I don't want to talk too much about it because, I might be posting an individual separate video on Auckland Airport. If we get 120 likes on this video, then I'll post a separate video for Auckland International Airport where I go into a more detailed analysis of the stock, okay? But, I'll be continuing dollar cost averaging into that position. As I mentioned, that's a position that I want to build into this portfolio. Currently, it's sitting at 8.5% allocation, but, I'd be comfortable taking that above 10% of my portfolio. So if you want to see that video, be sure to like this video. And this rounds up this portfolio update. And as well, if you'd like to sign up with Sharesies, I do have a referral link down below. If you use the link, you get $5 when you sign up. I get $5 as well. So that would greatly help the channel grow and the portfolio grow, as all of the $5 will be reinvested into the portfolio. So that's one way that you can support this channel. I hope you enjoyed this video. Until next time, take care.